Hello everybody, David Blair, the CrossHair Trader here. In this short video, I'd like to describe to you what we CrossHair traders call trading the itch. The itch stands for in the crosshair. So a stock or an ETF, whatever that you're trading, whatever instrument, futures, when it is in the crosshair, we call it an itch. And basically what an itch is a breakout from a consolidation or a pullback in a trend. If you really study the market, really study market conditions, you know that stocks trend and they consolidate. Within those trends, they pull back and consolidate. And when trends come to an end, they usually consolidate and then reverse and start trending in the opposite direction. There's several elements within this setup. You have the trend line, and this is the uptrend line, and then we have our downtrend line. So let's start with our bullish one first. So we have our trend line, and then we either have one or two things that occur. We either have a pullback and a breakout, or we have a much longer volatile price action called a consolidation before the breakout. And here is our breakout line, and you can see that within the pullback we break out. Within the consolidation, after testing that breakout several times, we then eventually break out along this trend line. So here's our resistance with our breakout. And then when we move over to the short side, when we're trading the downside, we trade both bullish and bearish. We have our trend line. We have our pullback. We have our breakout. We might as well call it breakdown, but a breakout to the downside. And we have our consolidation. Pullback, a longer consolidation, breaks the support. So it breaks out to the downside along a trend line. And the opposite when we're trading the bullish trade. This is called trading the itch. And we have designed in the crosshairs trading strategy, designed an indicator to find this setup. Basically saves you time as a trader. That's it. And then you apply the art of the chart. So this is the signal. It is available in the TradeStation workspace or TradeStation platform. I've developed a workspace within that platform. Fully functional workspace that has all of the indicators, and this specific one called the itch is available within this workspace as well. It is available again for crosshairs traders, and for those who do not want the platform or want to use TradeStation, you know that this is what I use when I make my trading recommendations, either within crosshairs trading family or publicly in my free videos on StockTwits, YouTube, and Vimeo. So without further ado, let's take a look at how a few of these work within the charts. First here is Hormel, HRL. You can see the elements of our trading strategy. We've had a breakout in a trend. Actually came back and tested that trend in this case and continued to head higher, pulled back again, broke out of some resistance levels here again, had a nice itch and had a nice run here. And then of course later on, the time of this video, a couple of weeks ago, we had another breakout along a trend, and we had another itch that fired for HRL. That's an up itch, bullish itch. And you can see in our charts we have green for up, and you're going to see in just a moment red, because these fire both bullish and bearish signals. Let's take a look at it. Here's IJR again, bullish crosshair, bullish in the crosshair signals, pullbacks, breakouts, much longer consolidation, and a breakout itch on IJR, multiple ones back from 2012, 2013. Let's take a look at another one. Amgen again. Amgen had a move higher, pulled back, formed a trend line. We broke through that after that pullback, had a nice move on Amgen back in March, April of 2013. Let's take a look at another. KEY again, pullback, breakout, a couple along this trend. Gave you a couple of itches again in the crosshairs. This is KEY. This was from the early part of 2013, January and February. Let's take a look at another one. This is CNK. CNK from the end of 2012 had a nice pullback after a long consolidation and broke out, gave us an itch. And then if we look forward here to August of 2013, you can see we had another push higher, consolidated, pulled back nicely to the trend line, and then broke higher for CNK. Let's take a look at another bullish one. How about GPS? Here was a nice long consolidation, broke out, pulled back a little bit here, broke again, pulled back along the trend line, broke out again. GPS, this is February to May, June of 2013. Let's take a look at. How about PAG, Penske Automotive Group? Nice long consolidation. Then back in August of 2013, we had a nice pullback and broke out with an itch. Again, a bullish in the crosshair. Let's take a look at another. Here's EGOV. Boy, don't you wish all of them worked like this. Nice move higher, pulled back, rested, and then ran again, broke higher. This is EGOV from August of 2013. Let's take a look. Here's ROK, Rockwell Automation. Back in December of 2012, had a nice sideways consolidation. Broke higher along a trend. That was your itch. And then recently we had another nice move, pulled back, broke higher, fired another itch. This was in August of 2013. Let's take a look at one more to the upside. This is PKI. Nice consolidation, breakout. Multiple ones here along the trend. Had a nice consolidation, broke out, held the breakout, and then another one here. Usually when there's a good trend, you'll get multiple signals. And then recently, this was back in 2012, and then recently 2013 in August, you see the in the crosshair after a nice pullback on PKI on the daily chart. All right, let's take a look at some bearish ones. You can see here with IBN back in May. Some of them do not work or last very long, and it indicates a reversal of trend. And we had a reversal of trend on IBN, and then we had our downtrend. Nice consolidation in the downtrend. We broke down, headed lower, pulled back, broke down again, gave us another itch. This is August, July through August of 2013. Let's take a look at another down one. This is TLT bonds. We had a nice push down, developed a downtrend, pulled back, broke down again, pulled back, broke down again. This is again August, June of 2013. This is the bearish itch. Let's take a look at a few more. SPG had a nice down, developed a support line, pulled back, and broke down again in the trend, bearish itch. NLY from May 2013. Nice long sideways action here. developed a new downtrend. We broke the support level, fired a bearish ITCH itch on NLY. Nice long move here on this one. Let's take a look at another. This is LQD. You can see a break of a support level, brand new trend line, broke down, gave us an itch. Then we had some volatility here, went sideways, developed a new downtrend, fired another itch. This is from August and May of 2013. Let's take a look at one more. And this last one, IYR. I want you to see both. You can see where a stock can give us both signals over months and years to be able to trade in both directions. Here was IYR giving us our green itches, our bullish itches on the trend with the breakouts, a couple of those. That trend was broken. We had a nice move higher, broke down, pulled back a little bit, broke down again, giving us now a down one here in August of 2013. And before, it was the beginning of the year of 2013 where we had the up trades and now the down trades. If you've got any questions about trading in the crosshairs, trading the signal and then adding the art, because we crosshairs traders know that it's not just about the signal, it's also about several other elements that we look at when we make our trading decisions, from weekly charts to general market conditions, measured moves, even moving averages that we look at. If you got any questions, please contact me at David@thecrosshairstrader.com.